even if you didn't do the assignment, did you guys at least read through the Candlestick Bible?
Yes, I did. I did.
Mike, Alpha, how about you? You did?
Yes, I went through it a bit, but not everything.
Okay, that's fine.
Yes,
Um, okay, so guys, welcome back. So this is going to be the beginning of a 2 weeks, and we are done with a. We've done 1 week. Hope you know. We started. Uh, sorry. Who can remind us when we started? Let's see. I'm in class.
On Thursday,
On what?
last Thursday.
Last Thursday, right? So we did last Thursday, Saturday, and then this week Tuesday. That's 1 week. So this is another Thursday. From this Thursday to next week. Sorry, this Thursday, this week Saturday, and next week Tuesday will make it 2 weeks. So before you know you're done. That means we have to take things very seriously right now. So right now I'm not going to assume that I am dealing with children. I'm dealing with amateurs. I'm going to assume that you all have been able to understand the basic concept of foreign exchange market, and you can, answer some basic question. So, but then uh, I want us to look at these markets, how to trade forex well, like how to trade forex. How do I really trade forex? Gentlemen, I'm going to be teaching you a strategy I handcrafted. I named it MPC, Momentum, Price Action, and Continuation. Now, the reason why I named it that is because over time I've realized that I'm going to teach you what a continuation is and what a momentum is. Please take notes. We are going to be making use of the terminologies I used in trading, and I mean because I created MPC. MPC has its own terminologies. So first of all, on my screen here, guys, we have Euro USD. Okay, so and I'm going to explain every single terminologies I'm going to be using. Please, at this point in time, what I will expect of you is to bring out your pen and a notebook wherever you are. Everything I'm going to be saying today is very important because we are no longer doing basics. This is the real business. Like you have 3 weeks for the real business. So now, the first thing we want to look at in market, when you open up a chart, what do you do first? What do you even do? That is the thing. What do you do first? Is the first thing you do is to understand the market's momentum. That is the structure of the market. So I call it momentum. Now, it's just like going to the river. I would have used a swimming pool, but swimming pool does not flow to a particular direction. So let's use a river, a sea. When you go to a river, you will notice that the current flows through a particular direction. It has a direction. So that is how the market works. Now, if I'm very much sure that even if some of us are living in a very good area, sometimes when it rains, nowhere is actually really good like that in Nigeria. You will notice that they are running water everywhere on the ground, bare ground, not even floor now, ground. Now, if you take shovel and channel that water from the part that the water is passing through, and then direct it to another part, you will discover that the water would also follow that channel you just created. That's how the market works. The market works like that. So the first thing when you pull up a chart, the first thing you do is to understand the structure. The structure is in correlation with the time frame. So the time frame to use in viewing structure, first of all, as a trader that is learned, that is not an illiterate, that wants to position his or herself in the market well. First of all, you want to see how the market is being played. Let us do it well because we are wonderful people. Let us do it well, right? When you pull up the chart, first of all, look at it from the weekly time frame. What has been going on? First, understand the market so that you can break it down to even your child. I don't have one yet, or to even a child, you know, that okay, look at this market. This is a weekly time frame. So when you're speculating, you're going to understand as an analyst, you're going to understand the pattern that the market has been on. It is that pattern that you're going to use. So this is, when you pull up a weekly time frame, it does not mean you're trading based on weekly time frame. This is since 2009, as the case may be. We are just trying to look at how this market has been moving. Major areas is what we are looking at. And to be very frank with you, the market has not really, should we say, it has been partially bearish, right? It has been partially bearish in the sense that even if we want to draw that trend line I taught you, you will understand that Euro USD has been partially selling since 2009. It has been dropping. What does that tell you? That tells us that, okay, that means this market has been selling. So what you need to do is to look at the current, move. Forget about these ones. This ones is gone. Look at this one. These are the active ones. This is, for instance, this is a breakout.
Sorry, I'm not seeing anything on my screen.
We're not seeing anything on our screen, sir.
Oh,
Even me, I'm not seeing anything on that.
please forgive me. Forgive me. Hey, may God not let them kill me. Hi. Things say they wise. Hey, sorry, sorry. This man. Anyways, can you guys see my screen?
Yes, sir.
I'm very sorry. I want to render a no-reserve apology for assuming that the screen was rendered. Unfortunately, yeah. So let us, go back again. So what I'm trying to explain in a nutshell is, when you pull up a chart, you want to analyze and make money. You don't want to just get yourself consumed. Please and please, gentlemen, it is better you see the big picture, because the way the banks play their game is not the way you think. The way the money works is not how we do it here. So we want to position ourselves in the direction of the banks, right? We want to do it the way the hedge funds are. We want to follow what they are doing. They are the ones to create the path. You follow it. If you go to swimming pool, let's take swimming pool out of this. If you go to swim in the river, trust me, you can never beat the wave. Go and try it anywhere in this life. You can never beat the wave. No triumph. You either swim in the direction of the wave or you go back. Now, there are different types of waves. We have the major wave. That one, they will even warn you. No go there or you cannot survive it. That is a very heavy wave. There are minor ones that you can just swim within the surface level and have fun and get yourself excited. That's how river flow. The same thing with forex. Now look at the major wave as the big wave. Obviously, the smaller waves still follow the major waves. Don't get me wrong. But the bigger waves, you might not be able to swim it if you're not an experienced swimmer. Maybe that is for people like divers to actually swim them, or people with much more experience, people that likes to explore the ocean, have the ability to swim those ones. The smaller waves are for us, baby swimmers that just want to have fun and go home in peace. So let us look at the direction of the market as the major wave. So the major wave, please let us use our eyes. That's what I did today in Zoom meeting. I told them, let us just do more of using our eyes instead of using our mind. You don't use your mind does not have sense. It is your eyes that will see what your mind will process. Your mind can only process things based on assumption if you don't see them. Your mind, what your eye sees, will tell your brain, and then your mind will record it, and then that is how it works. So you're not using your mind to analyze, you're using your brain. The information is transmitted from your eyes into your head, and your head will tell you, okay, this is what I am seeing. This is what it will tell the eye the result. So the eye is just like a transparent mirror. Who stands behind the transparent mirror sees in front of what is behind the mirror, what is in front of the mirror. The person knows exactly the objects that he or she is seeing. So what I'm just trying to tell you is that eyes is just to see. The brain is to interpret the object that the eyes is seeing. So if we make use of our eyes, we can see that this thing has been dropping. That is normal. That is exactly what my eye can see, right? We can just see that since 2021, Euro USD has been falling aggressively. And it is still going to be under the influence of the fall. It is going to be under the influence of this of the BS. It's been falling aggressively, and then in 2023 it started going up at least to a certain level. Okay, so now there's a tool I'm going to use. It is called Fibonacci retracement tool. Now the retracement tool is what it does this. If you want to use the retracement tool on a bearish market, right? Bearish momentum market, please pay attention. You place the tool at the top where the sell started from to where it stopped, right? You can extend it. Now, the where you place it is by the closing of the candle. You drop it. Gentlemen, this tool has levels. What I mean by level is the key level that we pay attention to. Once the Fibonacci tool gets to, there are three major levels. We have the 618 level, we have the 50% level, and 382 level. Once a market is still within the scope of 618, we know it's still very much useful. This market is still very much bearish because it has not broken above 618. If it breaks above 618 and go close to 786, we don't consider it a bullish bearish market again. The market right now, we are analyzing like learned people, not like idiots that just open chart and then start doing nonsense. No. So we are analyzing from weekly time frame, top-down analysis, so that if you're to trade for that week, you know where to position yourself. You're not analyzing like somebody that just that is a farmer. No, you're analyzing because you're being taught by an experienced person that trades this thing for a living. The 618 level, we are doing a weekly analysis right now. We are going to analyze it down to the time frame that we will take our trades. Gentlemen, pay attention. This is interesting. So from the 618 level, we've been able to see that, oh, this market, from where it bounced to 618. That means there is a likelihood that the market will continue falling down because the pressure, the wave is too strong. Please don't go against the wave. Always position yourself in between the wave, gentlemen. The wave is too strong that we will have an equal pattern, an equal correction. We cannot have an equal buy. No. The wave is too strong. So before we will have something that will go up to this level, gentlemen, it might take up to 2025. Not even 2024, gentlemen. So, comrades, as the case may be, let us pay attention to details because I am giving you a realistic approach. If it gets to 50% level, no problem. It's still a very good level. If it's around 382 level, no problem. It's still a very good level. But as we can see, it has disrupted this level. It has destroyed 50%, and this is where it respected. No problem. So right now, we've been able to see that the market is still very much bearish. So we'll delete all these analysis first. Now, this market that is bearish, now there is what we call price. The price is a zone where we have rejections, where the people are no longer interested. That is one of the levels you pay attention to. When you see the wick, the price zone, pay attention. Market is likely to react to that zone. There is likely to be a fight. When the market falls to a price zone, it's likely to react. It's likely to have a rejection. Before any market will ignore a price zone is when you have an engulfing. If you have a full bearish close candle below a price zone, that means the market is going to disobey that zone and come down or go up. If you have it above a price zone like this and in closing candle above it, that means it's not going to, continue falling. It's going to go up. If you have it below here, it's not going to buy. It's going to come down. So, but right now, this zone is not giving us any strong sign that the market is going to continue falling. It has given us two signs: rejection from the seller side, that's the red candle. Let me zoom in so that you pay attention to details, guys. Rejection from the seller side, plus it has given us a bullish inside bar, and it has also formed a support at this level to show that, oh, this price is likely to reverse from this side. Reversing means now from here we've seen that the market has been going up, down, up, down, up, and then see, instead of it would have continued at this level. This level. Let me show you something so you all understand me very clearly. Now look at that market. We would have, it would have been nice if the price did not break this level. If this market did not break this level, it would have been really nice. But the market broke this level, broke below this level. This move, the major move, is always called impulse move. The impulse correction, the impulse correction, the impulse move. Now, the market, something happened. The market started selling. Upon selling, it did not just stop. Instead of it to react to this level, although it did, it reacted a little bit. This reaction there was for retail traders. This small move that went up was just a reaction for this zone, and I'm sure this reaction lasted for 2 weeks before it disobeyed that place. Bam, to where we are. So we've been able to see that right now we are going to wait to see the outcome of this candle. But as it is, this market is selling. So if we are going to do anything right now, we are going to position ourselves in the direction of the sellers. In the direction of the sellers. We are done with the weekly time frame. This market is selling, right? So we are going to look for a way to sell. So if you also look at the daily time frame, let's see what the daily time frame says. So on the daily time frame, we are going to analyze it based on what our eyes is seeing on the screen, right? Look at the daily time frame. The market, look at where it's been falling from. In fact, it's no longer falling. It has destroyed the trend line. The market started buying, buying, and then look at, after that, if we are to also draw the trend line of the buy from where it started from, we've been able to spot it that, look, this buy was just a fake buy, right? This buy was just a fake buy. Now there's what I call trend termination. The trend was going up, but then it terminated here. Look at where the trend terminated, because it broke out of this line. There was no longer any correlation. It broke out of this line. So once a trend terminates, there is what we call trend termination and trend reconfirmation zone. This is a termination zone. We'll be expecting the trend to reconfirm that it's a selling pressure. It's a selling trend. That means confirming it means at a point it has to start buying to a certain level, maybe this level, but a certain level to where it almost broke from, certain level like that, it can buy to that level, and then it will start selling. This is a trend termination. Then we can expect the reconfirmation zone around a key level, a level that it broke out from. Could be here. This is the place, somewhere here. This is where the market broke below from. So we'll be expecting that if this market is to sell, for us to confirm the sale properly, it has to go back and reconfirm, right? But normally, some people can say, okay, this is where the market broke out from, and this is where it's confirmed from. Well, either ways, whatever it is, this is a minor confirmation. This is a minor confirmation. This is a minor confirmation because it broke here and then went here to reconfirm. We'll be needing the major confirmation that we confirm with the weekly move. But that being said, if you want to hold your position longer than what we are doing, fine, no problem. But for the time being, We are trying to analyze the market to see if the weekly move that we are seeing is the same as the daily, and then if the daily move is the same as the 4 hours, and then from there we'll look for a time frame that will suit our trading style, and then we'll take the trade, right? We'll delete this. Then the second to the last time frame that we are going to look for trading opportunities from is the 4 hour time frame. So from the 4 hour time frame, we are going to analyze the trend. Only what is happening is what we are paying attention to. Look at what has been going on. Please, we pay attention to this. Look at that. Then we'll pin it here. Only the 4 hours. Now, can you all see, using your eyes alone, not your mind, to trade, that it's been selling? The buys are very weak, sells are high, buys are 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 weak, and sells are high. Right now, it would have been fun if we caught the sell from here, but funny enough, day before yesterday, I saw this sell from here. I speculated that it was going to drop from that place. So that was a very big entry. I saw that from the 4 hour time frame. But I did not take the trade because I didn't see some of the key things I was looking for. Now, the sales is going to be a lot more longer than the buys, right? So now, this is what the 4 hour time frame is doing. So how do we even get to sell this market right now? This kind of market, you don't need to buy it. If you buy it, you're going to do yourself. So because normally the market is going to react to this level. Once it gets here, it's going to react to this level. And then once it reacts to this level, there's going to be a short buy to a particular level, to this level. That short buy is what we call head and shoulder. It's going to form something like this. So if you look at it very well, this is left shoulder, this is your head, this is right shoulder. It's a pattern in Forex that traders use to maximize profit. There is what we call head and shoulder pattern. So if we see this pattern, this is a price zone, right? Right? This is a price zone. We will be looking for a continuation move. This is impulse, correction, continuation. Because normally the trend, which is the momentum, is already down. You can consider this as a bearish momentum, correction, and then continuation. We've seen that the thing is in between this channel is already selling. So anyway, we are just waiting for the price, because right now we cannot sell this market at this very low price. We can't sell it low. We have to sell it high. So that means we have to wait for the price to go back up before we can sell this market. Right now, what we'll be doing is to look for a way to buy. And buying it is going to be a short-term buy, because the buy will not last long. Do you understand? Before we proceed, you can ask me questions.
So
Yeah,
when
Ha.
okay,
Una been dey mean me.
okay, you can go first, lady.
I actually don't have any question at this point.
Are you sure?
Maybe, come on.
Alright, babe, I send you one funny thing for WhatsApp. Alright, no problem.
All right, sir. I have a question, sir.
Shoot.
When the market goes down
Uh-huh.
and you buy at a certain point, you talked about the trending, the level at where the trending starts and where the trend ends.
Okay.
But now, when the market is dropping, when it's selling, when it's at the dropping point, is it advisable for someone to actually
Jump in.
still buy at the dropping point when the trend is going down?
You have to look for what will make you buy. For instance, look at this market. We know the trend of this market is
Yes, sir.
down. We know the trend of this market. The overall momentum is down. It does not mean that it's going to keep falling. The market will buy at some point, but look at it. There's always trends inside trend. This is an internal trend. This line I'm drawing now is an internal bullish move. This is an internal bullish move.
Okay, sir.
A very short bullish move to just make the thing look okay. Now let us use our eyes and not our mind. If we have drawn this kind of channel, we can see that this market obviously was buying, dropping, buying, dropping and buying, and then it dropped. Now we are trying to look at what point. This is a trend termination zone. This zone here, this zone is
Yes, sir.
trend
Yes, sir.
termination
Yes, sir.
zone. This is where the trend ended, where the drop that destroyed this trend ended. We are going to look for a trend reconfirmation zone. Trend reconfirmation zone. Where do we even spot as a zone that this trend is going to reconfirm ourselves? Is this zone? Why? Look at this zone. This is a price zone. Let me delete this thing. This is the zone. I can spot this zone to be a potential point of retracement where the market is going to use to head downward. Look at it. So if this thing is going to buy, it will get to this place, this very place, because it's a potential point. And then if it buys to that point, right? If it buys to that point, then it will drop. So now I want to I want to exit this, and then we join again, so that I will teach you the basics of MPC, my strategy, the basis, what I look at for, and then how you trade it. Normally, this is not actually the basis, but
All right.
this is a top-down analysis that we are doing, right? I am very very happy that this thing is on record right now. It's interesting. So yeah, so I'm going to end this, and then we'll have to rejoin again.